Hey, how's it going, everyone? Well, I got a few questions from my investing group about how to manage our emotion during the volatile or bear market condition. So, I got a couple of tips on investors' mindsets I thought I'd share here with everyone. If you have been paying attention to the market or if you're an investor, you probably noticed that the market has been very volatile or has been trending down since the beginning of this year. And I think we noticed that the market has been, well, I should say our economy has a lot of headwinds, that's for sure. Everything from inflation, which is at a 40 years high, and um, interest rates is going up, supply chain still an issue, and a geopolitical issue like the war in Ukraine. And I think the economists are kind of looking at a possible recession in 2023. So there are a lot of uncertainties in the market. So it's I think we can see why the market behaved the way it is, right? And I think for market participant, investor, everyone is feeling that our emotion typically can easily going where the market is going. When the market is going up, like in the bull market, we all very excited, right? Because everyone is profitable, making money, while the market is going down, and our emotion also follow along. And what make it worse is that it's been bouncing up and down and up and down. So everybody's feeling the pain, feeling stressed out and anxiety is high, etc., etc. But being value and long-term investor, we don't have to feel that way. And I got a couple of tips here, and how to manage our mindset being investor. Well, number one, don't forget, as I mentioned from time to time, is that we are long-term and value investor. We're not buying and selling stock, right? We are buying and owning value business. Great, wonderful business companies, which has strong business modes, which has is very profitable, sales, earning, cash flow has continued to grow, fundamentals still intact, great leadership, CEO, etc. If you focus at the companies, the business, the industry that we're investing in, and we still pay attention to what's going on in the society, in the world, and in the economy, and that's part of investing, right? As long as we make sure that we know whether there's impact and how big the impact is in the industry or the company that we're investing in, and make decision accordingly, then we would know we are okay, because we're focusing in long term. We're looking down the road 2, 3, 5, or even 10 years, right, ahead of us. So we can ignore some of the short-term noises, because the market does what the market is supposed to be, right? Going through a cycle, ups and down, but we can focus at the long term, focus at the business fundamental. And as long as the company we're investing in, the story is still there, fundamental thesis hasn't changed, we can stick with it. And that way, our emotion won't be bouncing up and down as the market does, right? So that's investor mindset number one. Number two, being in the bear market, we cannot just expect the same profitability as if we're still in the bull market. After all, the Federal Reserve is tapering, right? Taking away the punch bowl and the party is over. Okay. Hiking the rates and also reducing its balance sheet, selling off its asset. Okay. So in the bear market, our number one priority is to make sure that we protect our capital. Right? We make sure that we don't take any risk to trade around the market. And I think we can just think about being in a bear market as if we are out walking in the woods or in a mountain, running into a bear. Yeah, there's risk, there's danger. A wrong move, yeah, you can be in great danger, right? And the good news is that we're not alone. We're out there with a group of people. In fact, a big group of people, because there are millions of participants in the markets, from individual investors like us to big institutional investors. As Lee Cooperman, the founder and managing partner of his own family office and private investment fund, put it, right, in a recent interview on CNBC, he said, "He who loses the least in a bear market is the winner." It's very true. So don't be afraid to lose money in a short term by looking at your portfolio balance, right? It's not real loss as long as you don't just sell it, right, on fear. If you look at legendary investor Warren Buffett, right, in his annual letter to shareholders, on the very first page every year, you can look it up. He lists his annual performance in the past 20 to 30 years. And you would find that there are quite a few years that he also experienced double-digit loss as well. But guess what? Because he's being disciplined, he sticks to his investing principle. He minimizes his loss, and in fact, his loss is much less than the rest of the market. And over time, he's the big winner. That's what makes him an investing legend. So in a bear market, we have to think in a way that out there in the wood, we're not trying to outrun the bear. It's impossible because the bear is much faster, much more powerful, right? If we shift our mindset a little bit, as we always say, as long as we outrun the rest of the group, we become the winner and we are safe. So our focus is not trying to winning over the bear in a bear market, okay? We're trying to be safer, better than the rest of the market participant, to minimize, right? Be risk averse. So hopefully this will help everyone to manage our emotion, to have the mindset that, hey, this is part of the investing journey, going through short-term volatility and downtrend market, while our focus is long-term, focusing in solid, good quality, wonderful businesses, and being a business owner, not a trader or speculator. All right, so hopefully this is helpful for everyone. If you have any question, feel free to message me, and hopefully I can answer your question and be helpful. So until next time, cheers and take care.